M1 Finance's margin loan is a pretty standout option for investors wanting a sleek, low-stress way to access extra funds without cashing out their investments. This is essentially a line of credit that unlocks up to 50% of a brokerage account's value, and what really jumps out is the super competitive interest rate. Right now, it's sitting at 6.25%. To put that in perspective, competitors like Fidelity or Schwab are charging interest rates in the double digits, with rates like 11.75% at Fidelity, 11% at Schwab, and others in that same high range. That kind of savings matters, especially if someone is thinking about using margin over a longer time or wants to borrow a significant amount. Anyone with at least $2,000 invested in an M1 individual or joint brokerage account is eligible for margin, and there's no headache of filling out paperwork or waiting for an approval. The funds typically become available by the next business day, so it's easy to jump on opportunities or cover unexpected life expenses on short notice. The margin loan is totally integrated into the M1 platform, so on the app or the website, it only takes a couple of taps to borrow, repay, or check on the current maintenance requirements. There are no minimum monthly payments or late fees. Instead, the only thing to keep in mind is the interest, which gets billed every month, while the principal can be paid back whenever it works, assuming all the account requirements are met. This flexibility means the margin loan can help in multiple ways: increasing investments during market dips, consolidating debt somewhere cheaper, or just freeing up cash for everyday needs. There's no forced selling of securities, which also means no unwanted tax surprises from realizing capital gains. For people who want to keep investing while solving short-term cash flow challenges, having no payment or payoff deadlines can be a real stress reliever. The platform keeps everything transparent: activity, bills, maintenance status, so there's no guesswork. On the flip side, the risks are real and can't be ignored. Using borrowed money to invest can crank up both gains and losses. If the value of an account falls too much, a margin call can hit, forcing either an immediate deposit of cash or the forced sale of investments, possibly at a bad time. The requirement to keep a certain minimum account value is always hanging over the borrower's head. Also, retirement and custodial accounts can't use margin, so it's not available for every situation. To wrap it up, M1 Finance's margin loan feature brings a low-interest, user-friendly borrowing experience into the investing workflow. The 6.25% rate is a huge plus compared to traditional brokerages, and the hands-off flexible repayment keeps things from feeling overwhelming. But anyone considering margin needs to be comfortable with the realities of leverage. It can magnify returns, but it can just as easily magnify losses, and margin calls can upend even a solid investment plan. As long as the risks are well understood and margin is treated with care, M1's offering is a strong and cost-effective way for eligible investors to stay flexible and make their portfolios work even harder.